He's joining us now. Mark, great to have you with us here. Thank you very much for your time. Uh, are you looking spiffy, Mark? Looking good.
I got a haircut.
I don't know. You can't see us, but I mean, we're looking a little different.
Not too bad ourselves.
If you may say so ourselves. Mark, I was reading this note from GMO. And they've been, they've close watchers and long-time investors in emerging markets. There was a note dated today. And their view is that, it's unlikely that we've seen the worst in U.S. equities. Usually, markets overcorrect before things become better. I just wanted your thoughts on that. I mean, last night, of course, price action was neither here nor there, a kind of consolidation kind of price action. But just wanted to start there. Go on.
I don't think it will retest the low, the U.S. market. The low is in October, we think, and I think this year will be a good year. And the most important thing to me, technically, if you will, is the very noticeable trend change in the Philadelphia Semiconductor Index. And that really led the broader markets down all through last year. But it has broken that downtrend. It's up 15% so far this year. And now we can see the NASDAQ is also breaking its downtrend, just preliminarily. But I think over the next few weeks, we're going to get a confirmation of that. These actually look like reverse head and shoulders. So I know GMO don't do technicals. They're very fundamental and value-driven. But I think the technicals are important, particularly in a world as topsy-turvy as the one we've been in for the last few years with COVID and whatnot. And so I don't think it's a down year. I think we'll probably be up about 10% this year. And the S&P is already up 4.5%. So maybe I'm wrong. It'll be more than that. I don't think it'll be down.
Okay, well, let's just take a quick look at what's happening with the global markets. The Asian markets this morning are slightly subdued. So, a couple of those markets not doing much. The Nikkei is absolutely flat. The Korean index is up about 0.3%. Hong Kong is having a good showing, though. It's up almost 400 points this morning. And the SGX Nifty is indicating that we will have a muted start this morning. Do keep an eye out on a lot of things. I mean, there are good numbers that came through from a lot of sectors, whether it's auto, whether it's IT, banks. So that seems to be the main focal point for investors. Mark, good morning. It's been a strong earnings season so far, not as bad as perhaps people would have expected it to be, and a couple of pockets have done really well, whether it's technology, mid-cap tech has done well. You've had, auto names, banks have been leaders of the pack back home in India. What is your preference now for the rest of the year as an Indian investor?
Banks. I mean, they are the engine of the economy, and the economy is doing well. And they're not expensive, and they've written off all their NPAs. So I think it's simple, but it works. And there's more upside in the banks. I expect the Indian economy to be approximately a $10 trillion economy over the next 15 years. In other words, it'll treble. And the excellent proxy for that is the banking sector, because it lends to the broader economy.
All right. Hi, Mark. It's good to hear that you're saying that the U.S. markets will do well. But what about the Indian markets? We've been a little slow off the blocks in 2023 so far, or for the past 1 month or so. We've been relative underperformers. What kind of returns will you be baking in for the Indian markets? If global markets are pretty steady, can we outperform?
I mean, as I said, we expect about 10% in the S&P this year, and broadly I would expect around the same for the Nifty. Earnings growth will be higher than that, but it is already an expensive market. So whether it outperforms or underperforms, I can't tell you, Nigel, but I do believe it will be up alongside the S&P, driven not so much by foreign flows, but more by the local flows, just as it was last year.
Okay. So do you still believe in that narrative that a lot of money could perhaps move out of India and into markets like China because of how attractive China is looking from a valuation perspective?
No, I don't, because there never was much foreign money in India in the first place, unlike the run-up to the global financial crisis, which in 2008, India went down, I don't know, 55% or something like that, even worse than the S&P, despite the fact that it had nothing to do with the global financial crisis. But foreigners had invested a lot of money there. Well, we know that foreign inflows into India have been very low over the last few few years. And in fact, you would know better than me, but maybe they've even been negative. I don't know. So I don't think there's a lot of foreign money in India to sell in the first place.
Mark, you think on the technology side, things are going to look better? Tech stocks?
Well, the technicals of the tech stocks are telling us that. And of course, the earnings are coming out. And you pointed out earlier that Microsoft are giving pretty weak guidance for this coming quarter. But I wouldn't worry about the earnings because the earnings revisions of analysts are always among the most lagging of indicators. And what's very curious, if you look back in history, is the years when earnings growth were down were actually more positive on average than the years when earnings growth were up. And the reason for that is very simply that the market always looks forward. And so the fact that the tech stocks are now rising, the Philadelphia Semiconductor Index is breaking out, to me suggests the market is already looking toward the summer. And in the summer, I think we will start to see the economy globally bottoming and picking up. Perhaps even before that, now we've got this China reopening, and I presume you saw the European PMI last night was a positive reading, which nobody expected.
Okay, all right, Mark, we'll leave it at that. Thanks a lot for joining us, and we will, of course, chat with you again very soon. Thanks for your thoughts. Let's slip into a quick break. Lots of stocks to talk about, so don't go anywhere. Our list of top 10 stocks is coming up in just minutes from now.